Welcome back to the Money and Wealth Show. I'm Sterling Fox. Our special guest this week is back with us for his second appearance on the program. It's always a pleasure to speak with Michael Levy, especially at the halfway point of an interesting year. There's nobody falling asleep at the switch this summer, Michael. It's a very dynamic, very unsettling year for many.
Well, it is, and because I think mostly the volatility in the markets, as we said earlier, when markets have direction, you go with the direction. If you want to be silly, you can stand in front of the train and try and pick a bottom or a top, but most investors feel more comfortable getting on that train and going with it. But right now, the train's shuttling back and forth in the yard. It's not going in any definitive direction. And that's the problem right now, Sterling, is knowing what to do. And it's a really good question that really doesn't have an answer right now.
Exactly. I should probably also mention that Michael will be among the featured speakers at the Money Expo shows in Kamloops and Kelowna in the middle of September. And if you'd like to attend either one of those shows, you can just check out the howstreet.com website, and all the details are right there. And we'll put that address up on the screen for you at the end of the show as well. Michael, gold. This is an area that you focus a great deal of your professional attention on. You talked earlier about the range, the trading range between 1180, 1190 and 1260, and that's been pretty constant now for several months. And yet we hear these wild predictions of gold at $3,000 and $4,000 an ounce in 12 to 18 months. That's bizarre to people who follow the markets, because that's too far ahead to grasp.
Well, you know, it's not as far ahead to grasp in time as it is in price right now. I think the gold is going to do a $2,000 or $3,000 hit. I mean,
interesting.
Okay. I think it's going to go there because I don't think we are going to solve the debt and deficit problem in the United States. I don't think that we're going to solve anything to do with what's going on in Europe in short order. And that means people are going to have a fear of holding everything in paper-backed assets. Mm-hmm. As my friend Dennis Gartman, I repeat this all the time, said, in times like this, he wants an investment that if you drop it on your foot, it hurts, and that's gold. So I don't question, but what I do question is the shorter term. We've come from 800 and change to 1,260, a 50% move in this last move up. And as things quiet a little bit, and we've got a bit of quiet right now, you get investors coming out of gold and maybe taking their assets or their cash and going somewhere else shorter term. Now, somewhere else might be the US dollar. Somewhere else might be another market. So I think that we could have a pause in here. And a pause could pull back several $100s. Could. Again, the uncertainty.
Right.
But it wouldn't hurt my view of where we're ultimately going in gold, in the precious metals, because I think there's going to be an ongoing fear of where we are, paper assets, and for some people in the world, whether they want to hold paper assets in the country in which they live, or even hold gold in the country of which they live, they might want to have that offshore in a different country. Well, Canada happens to be one of these countries where people like to hold gold, so that may end up being an offshoot of what's going on. But back to your question about gold, we are in a position where we could correct, but if I was going to be anything, I'd be net long. I would not move out my core position. Not move it out.
Interesting. Also want to talk about real estate. Here in Victoria, Vancouver, one of the most expensive cities or marketplaces in which to live or buy a home in Canada, we've seen a bit of a correction. Prices have come off a little bit. There's certainly an abundance of listings in the marketplace these days. Is that uncertainty that you just talked about with respect to gold also transferring into real estate? Are people becoming less reluctant to get into the game or to play anymore?
Well, what's happened with real estate is that Vancouver and Victoria and parts of the Lower Mainland have priced themselves out of the market.
Okay.
So why do you get all these listings? Because the prices went up. But damn, Martha, if I can get an extra $200,000 for the house, let's sell it.
Sure.
Well, we're going to put that on the market. Let's just test the waters. So you get this abundance of listings, and then you get fewer selling because the prices are up. So you do get your correction, but it's not Canada-wide. when you take a look at the stats, there are places in Ontario and Quebec where prices are doing fine, thank you, other than Toronto, other than Vancouver, other than parts of Victoria, where we've had our correction. But even that, there are sections that are still hot. Out where we are in South Surrey, White Rock, the market's not as cool, or hasn't cooled like it has in Vancouver.
I guess what I'm getting at, though, is in the United States, they're in the 6th year of a downward spiral in real estate realities. 1 in every 4 American homes is now, with a mortgage, is now in negative equity. The mortgage is worth more than the current value of the house. Is it possible that that malaise could leak across the border and affect us to the same extent it's hamstrung the American market?
I'm going to give you one of my answers that is unequivocal. The answer is no, it can't happen here.
Okay, why?
Because we have demanded larger down payments. The banks have been, and financial institutions have been much, much more careful on to whom they lend. And in the United States, to qualify, all you needed was a warm body, a heartbeat, and a promise to get a job. And that's not exaggerating.
Right.
Where in Canada, you couldn't even get through the doors of a bank to apply. So much more stringent rules. Can the market sell off? Yes. Is it a real estate bubble? Not in my mind. If we go further into recession, could the market come down significantly? Yes. Is it going to fall apart like the U.S.? I hardly think so.
Halfway point through 2010, as we wrap up our conversation, and a pleasure to have you back. Are you optimistic? Are you uncertain? What's your state of mind?
I'm guardedly still optimistic, but uncertainty rules because the markets don't have a direction. They're trading in a trading range with great volatility. I need to see a direction. Sterling, you can't tell the markets what to do. The markets have to tell you what to do. And right now we're waiting to hear from the markets.
Always a pleasure to hear your take on life. Michael Levy, thank you so much. It's good to have you back with us.
Thanks very much, Sterling.
We'll be right back.
Good afternoon. My name is Larry Ray. I'm the chairman and CEO of Molycorp Gold Corp. As the name states, we do have a deposit we're developing in British Columbia, which is a pure molybdenum deposit. But our focus these days is on magnesium in Nevada. Through serendipity, we discovered a large deposit of magnesium running about 10% with a high purity and consists of about 256 million tonnes at this time, 52 billion pounds. Our main emphasis is to move this project forward by beginning a drill program later this year in which we can increase the integrity of the resources into the indicated and inferred, as well as increase the resource itself. For further information, please visit our website at molycorp.com or phone us at 604-531-9639.
Tax Tips with David Ingram.
Nobody hates the HST more than I do. I don't like it. I wish we got rid of the PST and the PST part of the HST, but it's here to stay. July 1st, you had to start paying it, and you had to start collecting it if you were in business. But here's the good news. If you or your kid or your nephew or somebody else has low income, you're actually going to put more money in your pocket by the time you take your GST, HST credit, put it in your pocket, and then have to pay out the GST, HST that you're going to do. So that's good news, and that's a tax tip from David Ingram.
And that's our program for this week. Our thanks to David Ingram and to our special guest, Michael Levy. And thank you for joining us. If you have some thoughts about today's show that you'd like to share with us, please send them along to comments@themoneyandwealthshow.com. I'm Sterling Fox. See you next time.